Welcome to the October update. Well, October is once again characterised by general optimism across global financial markets, fueled primarily by three developments. Firstly, a high priority meeting between Trump and Xi delivered a much needed trade truce. While this de-escalation boosted sentiment, we remain a little bit concerned that deeper structural tensions still remain between these two global superpowers. Secondly, and continuously, the AI narrative continues its powerful momentum, fueling an ongoing rally in US equities, particularly in the Magnificent Seven. Although there were some mixed reports from some of the big tech, there's a few sell-offs, the market concerned about some of the capital expenditure that these companies are undertaking to build these data centers. And then finally, the US Federal Reserve delivered a widely expected 25 basis point cut. However, there was a bit of caution coming out the back of that when Chairman Powell said that the next cut was by no means certain because there's some ongoing concerns about inflation. While back here in New Zealand, the RBNZ delivered a substantial 50 basis cut to the OCR on the back of ongoing domestic weakness. This in turn led to the weakening of the New Zealand dollar by over 1.4% in October. We expect another 25 basis point cut in the meeting later this month just to help support the New Zealand economy, which continues to go through pretty tough times. Well, on the back of all this, global equities, as measured by the MSCI World, rose by nearly 4% in New Zealand dollar terms, while the local market had a very healthy 1.9% increase in value. So looking at markets, you would think the world is a happy place. It most certainly is not. As Americans now are as unhappy as they've been for a very, very long time, with concerns about the cost of living, which were reflected in the recent midterm elections, rising unemployment, and now a record-breaking government shutdown, all causing real concerns. Also in America and a lot of other developed economies, the only people spending are the wealthy. Everyone else seems to be living paycheck to paycheck. Economists are calling this a K-shaped recovery. Some doing really well and a lot not. The same thing is happening in company share prices, with any company that has an AI theme in its business model doing very, very well, all the others struggling. Now, this uneven world is causing us some concern, and it's why we continue to remain defensive and underweight global equities. We're concerned that the US market in particular is both overvalued and over-reliant on the AI, and so prefer to hold more money in New Zealand equities and globalist infrastructure. Two areas we believe we're getting better rewarded for taking risks.